What's going on, everybody? Welcome back to the channel. I appreciate you stopping by, spending a few minutes of your time here with me tonight. We've just closed out yet another week of trading. I hope you were able to stick to the strategy, to follow your plan, stick to your trading rules, all that good stuff. All right. Now, with tonight's video, we're going to go over Thursday and Friday on the DJ30, okay? And I would like to emphasize the idea to you of making money when it's easy to make money, all right? And I guarantee you that there are days where it's going to be easy to make money, all right? It might not be every day, okay? But there will be an obvious trade eventually. All you have to do is sit on your hands and wait for that obvious opportunity. All right. Now, the problem is a lot of traders sort of bring a 9 to 5 mindset with them into the market. And what I mean by that, right, is that with a typical 9 to 5 job, you're going to work, you're clocking in, you're doing your job, you're clocking out, and you'll be compensated for the time spent on the clock, right? But trading isn't your typical 9 to 5 job. So you can't bring that mindset with you here, right? With trading, you might sit there and stare at your charts all week and never get a trade. So you never make money, right? But traders come to their screens every day and try to force something to happen, okay? They try to force trades. They feel like they need to trade every single day. Like they have a compulsion, okay? They must trade every day and try to make money, okay? Because that's what we're used to. But you can't do that, all right? You have to just simply sit back and wait. Conserve your mental capital, conserve your financial capital for the easy day where you can just walk in the room, slap the market maker right in the face, and then run their pockets, all right? That's the goal here, all right? So remember that as we look at these charts. Now, in order to make money when it's easy to make money, you sort of have to understand yourself as a trader, and you have to understand the setup that you're hunting. So for me, for example, okay, I'm short biased. Okay. And what that means is that shorting opportunities stick out to me. They're a lot more clearer. They're a lot more easy to recognize than other opportunities. Okay. So that's where I'm going to focus. And I like to trade reversals. All right. So I'm short biased. I like to trade reversals because I understand that about myself and my personality as a trader. Right. And just how my brain works. That's where I'm going to focus most of my effort. Right. All right. Now let's get into these charts. So here is the DJ30, a 5-minute chart, and we're a little zoomed out, all right? You can see here that Friday and Monday give us a very clear high and low range. This is our box that we're working with as the week progresses, okay? And all we have to do is sit back and do nothing, all right, until one of these levels is hit. Sometimes doing nothing is the best thing that you can do, all right? All of this right here, Monday, Tuesday, Wednesday, all of this stuff that's happening on the inside of this range, don't touch it, okay? Don't touch it. It looks like there might have been good opportunities there, all right? And if that's your setup, right? Like if you're looking for this type of opportunity at the London session for some reason on a US index, maybe you would take that trade and you made out like a bandit, okay? But for all intents and purposes, this is a no trade zone. You just simply leave it alone. Leave that to the market wizards. Leave that to the scientists, okay? Leave that to the geniuses. And you wait for the simple, easy to recognize, obvious trade, okay? And you can see that Thursday was a very obvious trade, especially for me, someone who is short biased and who likes to trade reversals, okay? So here is our master pattern template, okay, that takes place over the course of 2 days in this case. So you can see here, we put in our peak formation low and we start to pump up. Immediately, I'm thinking of this peak formation low as my potential target, okay? okay, for a pump and dump template. All right. We put in this peak formation low and we start pumping up. We are on the front side of the move while we are pumping up and putting in higher highs. Okay. So if you were going to trade there, you would be looking for dump and pump opportunities in the session that you're trading. Okay. When we have higher highs, that's the recipe for the dump and pump as we continue to put in higher highs. Okay. So we have our peak formation low. That's our step one. Okay. Then we get a peak formation high in London on Thursday. That's our step two. And then we have a lower low on the inside in the gap time. All right. That is our step three. That lower low on the inside is alerting us now that we are potentially shifting from front side to back side of this move. When we're on the back side, that's where we're making lower lows and we're looking for pump and dump scenarios in the session that we are trading. All right. And you can see, right? Peak formation low, peak formation high. Sorry about that. Lower low on the inside for the pump and dump opportunity. All right. Now, here's a 1 minute chart looking at the New York Open. Okay. The 9:30 equity hour open. You can see we've already broken out of the high of the week, which is the lower yellow line right here. This upper yellow line is the London high. Okay. The previous session's London high right at 9:30 when the New York equity hour open, right? We break out of that London high. There's your liquidity sweep or manipulation or whatever you want to call it, okay? But we have three pushes into that high, right? We're working the high, right? We break that level, we trigger higher time frame traders into this market and then sell into those buyers, all right? Now, if we zoom in, you can see, okay, 9:30 is that last green candle. Then we have 1, 2, 3, 4, 5. Okay, so the 9:35 candle is your entry. That first 5 minute close below the EMA. Boom, you're in the market. Stop loss up here at the high of the day. Okay, and you're targeting the opposite side of the range or holding until the close of the day or until you're comfortable with it. All right. Very simple stuff. This is what I'm looking for any given week that I'm trading. Okay. I'm looking for an obvious shorting opportunity. Okay. Once we break a daily level or a weekly level, which in this case we have both. We have broken a weekly level, we've broken the daily levels. All right. For a very nice reversal opportunity. Okay. This is an example of an easy, obvious trade. Okay. Now, let's zoom out again. We're going to take a look at Friday. All right. And I want to remind you of some simple stuff. Okay. And I've made videos about this in the past, but remember that 98% of the candles on your chart have wicks on one or both sides. Okay. So imagine that we're having multiple days that close lower than the open. Okay. Red days. We're having multiple red days. Those red days are going to have wicks on the tops of the daily candles. All right. And that wick on top of the daily candle represents a portion of intraday price action that occurs above the previous day's closing price or the current day's opening price. Okay. So that wick means to me, all right, that we are going to trade back into the previous day's high and low range before continuing in the originally intended direction. You understand what I'm saying? So check this out. We have our pump day, all right? On Wednesday, we pump up, we close in breakout at the highest close of the month on a Wednesday, all right? That's a signal. If you have access to Stacy's masterclass, the ACB masterclass, this was picture perfect, okay? We have our close and breakout at the highest close of the month on a Wednesday. Then we coil sideways going into Thursday, take out the highs in the New York session right at the open and dump, okay? But as it is, here's our pump day. The next day takes out the high and gives a lower close. That's our first red day. So when we come to our charts on Friday, we're looking for a shorting opportunity. We're looking for that first red day follow through trade on Friday. All right. Now notice we put in this peak formation low just before the close of Thursday. All right. Immediately, I'm thinking to myself that this peak formation low is my target. All right. And what I'm expecting to happen is for Friday to open and trade above the opening price or the previous day's closing price, pump up and then dump. All right. In the New York session to take out this low and continue going lower. All right. And let's look at Friday. So here's that level. And you can see we pump up, trading back into the previous day's range before dumping down and continuing that momentum to the downside for an easy first red day follow through trade. So this is what I mean, okay? We have our red day. We can expect more lower prices, okay? We have our first red day. So maybe we're expecting the next day to also close red. And if that's the case, we want to see this market pull back into the previous day's high and low range before dumping and continuing that downward momentum. All right. And here's that chart. All right. We're looking at a 5-minute chart still. All right. And you can see right here at the New York Open. Okay. There's our M pattern at the high of the day. That first bearish candle closes below the 20 period moving average, there's your entry. You're in there. Your stop goes at the high of the day and you're targeting the peak formation low from the previous day. Now we don't get all the way down there, okay? But if we get that close to the target, bro, all right, and then start engulfing and trading the other way or closing above the EMA, just get out of the trade. You know what I'm saying? Don't be silly. Just get out of the trade. Right? So these were very good opportunities. You've got to train your eyes to see these opportunities. All right. Go back, rewatch my videos on the master pattern template. I've been talking about it nonstop, right? Almost every single video over the last 6 months is showcasing the master pattern in some way, shape, or form. Okay. So remember, we are trying to make money when it's easy to make money. All right. Find your box, find your clear and obvious high and low range, sit on your hands, wait for the market to trigger one of those levels, wait for the market to break out. Remember, the market can only do 3 things, says Stacy, right? And those 3 things always begin with a breakout and a pullback. Okay. So you're waiting for the market to hit this level. And then you're asking yourself, okay, are we going to pull back and then continue? Are we going to pull back and reverse? Or are we going to pull back and enter a sideways coil or a trading range, right? So you can see here, this is what makes it so obvious to me, right? That we break that level and then immediately start to dump down on that day, okay? Very clean, well-engineered chart, all right? Wait for this to happen. Okay. This is where you're going to get your 90-10 probability ACB types of trades. Okay. Make money when it's easy to make money. Until next time, and I hope you continue to free your mind.